This is the 10-Minute Contrarian Podcast. This is VP. We're a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere.
And we interrupt this ad read. I don't have my microphone with me. I'm away. We shot this on Thursday. Today's Saturday. And on Friday morning, our beloved Bybit suffered the largest hack in history, $1.5 billion taken from a cold wallet, taken in ETH and staked ETH from the Lazarus Group in North Korea. But Bybit got in front of it right away, and it pays to be big and well capitalized because even the largest hack in history could not take them down. Any customers who wanted to withdraw their money could and did, and trading was never even halted. So if you're ever wondering what would happen in the worst case scenario, would you still be able to get your money back from a place like Bybit? That question has been answered. Now to all of my traders, if you have any concerns on the potential knock-on effects this hack might have on Bybit and your funds, then by all means take them out. But looking on my back end, what I can say is it looks like the majority of you just kept right on trading. So big shout out to Bybit and my Bybit traders. Let's hope long-term this is a W. So far, it looks like it just might be.
It is the 10-Minute Contrarian Podcast, and a short week for me. I have a little weekend trip coming up tomorrow, and I say tomorrow, I'm shooting this on Thursday, and everything is going to air on Saturday, so whatever transpires from then to now, because things happen so fast these days, you just never know. And this episode was not on the spreadsheet. It did not even exist, but it is something that is happening right now. And the significance of it is a bit hard to measure, but it's something we have never seen before. Or I should say components of it are like nothing we've ever seen before. And I'm talking about what is going on in the gold market right now. Gold is a big part of our strategy here at the 10-Minute Contrarian Podcast, and I would say even of equal importance, if not more, is what this all means and what this is all getting us prepared for. And so these things are what we're going to talk about today. Now, if you did not know, the LBMA in London, one of the two biggest places that hold physical gold, or I should say physical gold for public use and trading and all that, they ran out of gold. And they're not supposed to do that, if you didn't know. If you get your gold through the LBMA and you stand for delivery, they are supposed to be able to give it to you as soon as possible. They call T+2. So 2 days after you ask for it, it should be in your hand or on its way. But as it stands right now, if you had your gold at the LBMA and you are currently standing for delivery, it has gone from T+2 to T+60. And anybody who has owned a business in the past and has to deal with customers that pay net 15 or net 30, sometimes they have to extend. And just because they extend, that doesn't mean by that deadline they're going to have it. They may have to extend longer. And it wouldn't be the biggest surprise in the world if the LBMA had to do this. And now what I find very interesting is the other place that most traders and investors have their gold is at the COMEX. And I don't know what this means, but I found it very interesting. I think I know what it means. The COMEX has a higher price on spot gold than the LBMA does right now. Curious, right? So who knows what's going on? What I do know is there is a large run going on right now, and it is causing a lack of supply everywhere. So I tweeted out earlier this week a lot of the factors that are going on in the gold market. And I mentioned how South Korea was having issues with silver. And turns out I was only telling half the story. They have issues with gold as well. So I pulled this up from Grok to get a little more clarity on this. Is the entire country just out and nobody can get it, or is it only certain spots? Here's what it says. As of February 20, 2025, South Korea's situation, where the Korea Minting and Security Printing Corporation, KOMSCO, and major banks have suspended sales of gold and silver bars due to supply shortages and surging demand, stands out as a notable case. However, there are indications of similar supply pressures or disruptions in other countries, though none have reached the exact same level of publicized sales halts by official mints or banks as South Korea. So if you are going through the banks or the actual mint, which is where a lot of people go through, especially institutions, then you are having a rough go at it. I'm like, well, okay, Grok, you mentioned other countries. What are some of these other countries who are experiencing problems? And they came back with the United Kingdom, as we know, China, Japan, the United States, Switzerland, and Russia. If they would have just thrown in India, you would have officially had all of the major gold buyers in the world. So tell me that's not significant. I didn't mention, I didn't say give me a list and they gave me, Turkmenistan, Sierra Leone, Nicaragua, and Belarus. No, they gave me all the major buyers of gold in the world and explained to me the problems they were having. On top of that, on the retail side, so the things that affect us more, two of the largest producers, if not the two largest producers of gold bars, Switzerland's Metalor and Arger Heraeus, have either slowed dramatically or completely halted production temporarily. And this is really big too. As you guys know, I have an offshore gold provider that I use that stores it for me in Singapore. And they, even when there are shortages, like in the silver market especially, they always have product, no matter what. It's great. But I just went and checked this morning, because I checked a couple days ago, and they still, as far as the bars that I like, the denominations and the sizes that I like, they did have about 40 metal ore bars, but now, 2 days later, they currently have 0. I've never seen a drop like this before. Now, they do have some at the shop if you want to go to Singapore and pick it up. That's mostly for the local market, but for the rest of us who don't live there, they're gone. And you can go ahead and buy them anyway. You just won't get it for another 2 to 4 weeks. And this is a delay that I have rarely ever seen them have. Now, I went to a big producer or a big retail shop in the United States, APMEX. They are arguably the biggest. There's a saying, if APMEX goes, the whole world goes, because they just have copious amounts of everything. And they seem to have a decent supply. The problem there is they never tell you how many are left. And sometimes when you hit the buy button, they'll even say, hey, just so you know, we can't get it to you right away. You might have to wait X amount of time. And since I'm not an APMEX customer, I can't really tell you what they have and what they don't. But needless to say, there is a buying frenzy going on worldwide. And this has nothing to do with sovereign nations buying up a bunch of gold like we saw a year ago. Or does it? So as far as retail goes, it's the usual suspects. It's China, India, and Russia that are buying up a lot. Now, we talked before how especially China and India, and especially India, they're very good about buying up metal when it's cheap. The only other time you will typically see them buy, even at higher prices, is if there is a reason to FOMO in. But again, this is mostly retail. It's not big countries. The big news as far as what countries are buying these days is more on the Bitcoin side than it is precious metals. So who is buying and who is making the rest of the world FOMO in like this, to where they drain the entire LBMA? So I've been digging at this all week and checking my sources as well. And I think we can reasonably deduce here that there's a good chance that a lot of this buying is coming from the United States. They're just taking a page out of the China playbook and being a bit cagey about it, being a bit quiet about it. Now, why would you take that approach, however? That's another big question. Well, a theory, a good theory, I think, is they are trying to fill up Fort Knox before it gets audited. If you didn't know, Fort Knox has not been audited since the 80s. People have been calling for an audit for a long time, and they just simply say no. But now the new administration has come in, and they say, we want an audit. So if you don't have the gold you say you do, you're like, oh, holy shit, we need to find a way to get the gold back, or else we're going to look really silly. Now, a theory, and a good theory I have also heard about this, is that they do have the gold, but we don't want an audit because we don't want the whole world knowing where that gold came from. In other words, who we stole it from, or who we accepted it from. And I get that too. It's not right, but I get it. Now, some additional rumors going around is that, well, not really a rumor. We have outright said that the United States is trying to build a sovereign wealth fund, and it's not just going to have crypto in it, obviously. It's going to have a lot of things. So we could be getting that going as well in terms of where some of this gold might be heading. And also, I'm hearing that JP Morgan is pretty much at the forefront of all of this. And if we know anything, JP Morgan loves to illegally tamp down the prices of precious metals. But I have it on authority that they are the ones who are spearheading all of this, or at least handling the back and forth. And this is why you have not seen the price of gold go absolutely bananas this week, despite everything that's going on. Now, what does that mean for us? Well, maybe you would like to FOMO into a gold position or add on to a position. I've always said with gold, it kind of doesn't really matter when you buy. Gold is defense that just happens to go up a lot. So I would absolutely be okay buying gold at higher prices. And when I say buying, remember, you're just simply moving money from one location to another. You can always move it back. So the risk in a lot of these cases is not what you think it is. But with gold, to me, it's the least risky thing you could possibly have. That's why we talk about it so much on this show. We pay very close attention to defense. And for my money, there is no better defense. Now, I also did a video years ago on the YouTube channel talking about different ways to buy gold. And that video still holds up today. But let me go ahead and give you an abridged, updated version now in terms of all the ways you can hold gold and what I think, in my own personal opinion, not your opinion, my opinion, to the pros and cons of each. The very first way is to hold it yourself in your possession, which I am totally fine with. What I am not fine with is the gold maxi bugs saying things like, well, if you don't hold it, you don't really own it. Yes, you do. Now, it depends. If you choose to have it custodied with a place like the LBMA, who the whole world knows is lending it out and is going to get in big trouble and does not have all the gold it's supposed to have, well, then, yeah, you might have issues. But there are going to be plenty of other ways you can hold gold to where this will not be the case. And we'll talk about those. But the first one is holding it in your physical possession. This is all well and good, assuming you are rooted to where you are, which means you're never going to live anywhere else. And you don't mind not being able to sell it for spot price when it's time to sell, because you won't. Unless, of course, you sell at the absolute perfect time. And let me tell you, when that perfect time comes, you are not going to want to sell it because price will be going parabolic. But just know, as a tax for being able to hold it in your hand all the time, you are going to be getting the worst of it on the way in and on the way out. But I am still completely fine with going about it this way. The second way, and this is my preferred way, is to have it custodied somewhere else. Well, but VP, you have to pay custody fees. You do, but they're not that much. And for the peace of mind, it is more than worth it, especially when you're somebody like me who travels a lot, and people get really suspicious when you have gold bars in your bag. And over a certain amount, you have to claim it, and then I don't even know what happens. And do you get taxed on it? I have no idea. I've never had to deal with this. And I've heard of some people in the nomad community who weren't even able to get their bars into the country. So why not just have the real thing and have it custodied offshore at a large place who has been doing this for 40 or 50 years? Seriously, I cannot believe the majority of people don't do this. I see so few downsides. Like I said before, you almost always have the type of gold or silver that you want in stock. It's super easy to buy. It's real. And I can only speak for the shop that I use, but I can at any point in time exchange any portion of the gold I have for, I think it's like 5 or 6 different fiat currencies right now, or Bitcoin. One click, no haggling, no negotiation, boom, boom. But VP, you also have to pay a percentage on the way in and on the way out. Yes, I do, but not nearly as much as I would if I bought it from a local shop down the street. So there is that as well. And these places are all over the world. The main hubs are going to be places like Switzerland, Austria, Singapore, the United States, Canada. And you can go to all these places right now and see what they have. But the ability to not have to worry about The security and the transport and all the other stuff just makes this such a superior option for me in particular. And I would imagine it would be for most of you as well. Now, the third option is paper gold. So gold products you would buy on the stock market. Now, a lot of people in the gold community, especially, remember this, especially people who have a gold or silver product to sell you, are going to shit on paper gold. I don't think there's a reason to shit on paper gold. I think this is a perfectly fine and agile way to hold gold. Now, again, back to these people who say, well, if you don't really hold it, you don't really own it. All you're holding is a piece of paper. Listen, this podcast is not for you revolutionaries who are out there trying to fuck over the government. This is not for preppers who are dumb enough to think, one, that we're actually going to go into a Mad Max type society, and then two, once we get there, that people are going to have any idea what the fuck to do with gold or silver coins or bars, even worse. This is a pipe dream and a dumb one. At this podcast, we are investors, which means, like it or not, if you're being honest with yourself, all you want is to end up with more fiat currency than you started with, regardless of what instrument you are holding. This goes for stocks, gold, Bitcoin, all of it. It's all we really care about. We can like the idea of gold and Bitcoin and what it does and its place in society and in the world, but at the end of the day, all we want is more fiat. So the overall form gold takes is far less important, and I am okay with paper gold provided that you understand that ETFs like GLD do the same thing in many cases that the LBMA does. So there may come a time where if people really want to stand for delivery, which is not something anybody would really do with GLD, which is the largest ETF in the United States, for gold, but people really just use that for trading or to have a little bit of gold position in their portfolios. Again, this fantasy world that they're going to show up and say, hey, I want my gold in my hand right now because I own shares of GLD is not a realistic situation. But for what it is worth, there are ETFs that do this and ETFs that don't. One of them that we like the best here on the show, again, not financial advice, is the Sprott Gold Trust, ticker symbol PHYS. Now, if there ever came a time to where somebody said, okay, you guys have to show us everything you have. Let's see if the gold's actually there. I am very confident that the people at Sprott would have all of the gold they say they have. And I would be far less confident with an instrument like GLD. So, paper gold, this past week or so you had all the gold people saying that the paper gold market is going to be in trouble. I do not believe that. But for what it's worth, if you're going to go this route, it's totally fine. I just think there are far superior ways to do it within the paper gold market. And those are the avenues you should be considering. And the fourth and final option, which is, and there are other options out there, but I think these are the top four. And this has been a pretty popular option with the people who listen to this podcast, and that is to hold it on the blockchain. So just the exact same thing you'd be doing in the paper gold market, just with a company who is on the blockchain. The two main companies there are PaxG and XAUT. There are clear differences between both. I have written a blog on it. If you want to go to nononsenseforex.com, go to the search bar and type in PaxG or XAUT. That blog post should pop up. I will summarize it for you. XAUT is more for institutions. PaxG is for the rest of us. What's really interesting is I've met people recently who do this, and I didn't know this was even that common, but apparently it is. There are people who will go on the blockchain and pull up, it's usually a weekly chart, what they do, and take the gold to Bitcoin ratio. And then when it flips either way, they will exchange PaxG for wrapped Bitcoin and then just keep doing that back and forth. And so they always hold one of these assets, but whichever one they hold is, assuming they're doing a good job at this, they are always holding the asset that is getting stronger between the two. Very interesting. But as far as just holding, I think PaxG is a perfectly fine instrument. I think Paxos is a very legitimate company. Check and see if they have audits and or attestations. But I have always thought this is a perfectly fine way to go as well. Is it the best way? No. I think my favorite way is to have it custodied offshore or even onshore in a place that does this professionally. But those are your four main ways. I would ignore a lot of the noise floating around out there. And just the main thing is that you have gold in your possession somehow through any one of these four vehicles. I've been talking about this since the price of gold was $1,600 per troy ounce. It is now currently over $29. And it's defense. But it's also very telling. Why are so many people scrambling to gobble up as much gold as possible? Why are countries doing the same? Well, we can take a look at what's going on in markets. The steam, even though price is still going up in a lot of ways, the steam has really fizzled out. If I were to come to you and say, hey, give me 3 huge bull cases for the stock market in the United States right now, what would you even say? The whole AI boom, the one thing that has propelled that entire market on nothing but air for the past year, is finally seeing its topping out moment. This administration even said, look, we're going through a big transition. Transitions are hairy. They're ugly. Get ready for them. And this administration is doing a lot of things that they feel need to be done. And I would be willing to bet that they feel like a proper recession is going to be one of those things. And I had said this before. It would be in their best interest for re-election purposes to do it sooner as opposed to later, obviously. And if you remember, too, at the very top of the year with my macro episode, I predicted that we would see lower prices in the S&P and the United States dollar both. You think they're inversely correlated. They're not necessarily. We saw both go up last year. And if you are looking at your charts, Forex traders, if you zoom out and take a look, you are seeing that the dollar is starting to turn over a bit against the euro and the pound both. And you'll also see it just made a lower high on the dollar yen. So even though I don't quite know what's going to happen in the future, the signs are there. I definitely see legitimate reasons to FOMO into something like gold if you hadn't done so already. Now, a lot of us on the podcast here had the foresight to do this ahead of time. Even though the recession may not have been coming anytime soon, we still knew it was inevitable, and we still know that the dollar is just going to lose its value over time, as is every fiat currency. So even though we got in at better prices, in my opinion, there really is never a bad time to do this. But in terms of urgency, based on what we have seen transpire in these last couple of weeks, things always happen slower than we think they're going to happen, but the urgency might be there. And I wanted to bring this information to you, so when this entire washout finally does occur, we can all get together and say that we were not crazy. We were just early.